Hello, and welcome to Rocket Fuel, your daily update on everything that's happening in the Rocket Fuel community. My name is Wack. Today is August 29th, and today's episode is going to be jam-packed with Rocket Pool and Ethereum news, including things about the rewards night that happened last night. We're also going to be talking about 1KX and what it looks like they're doing with their RPL. After that, we're going to be talking about the SEC sending a Wells notice to OpenSea, Vitalik talking about airdrops, we're going to be talking about Sony, Soneium, and a whole lot more. Let's get started.
10, 9, ignition sequence start, 6.
So before I begin, you might notice that my speech is a tiny bit slurred during today's episode. It's not because I've been drinking or anything like that. I had some dental work done today and I'm still a little bit numb. So sorry about that. If you can't understand anything that I say, just leave a question on Discord or YouTube. I'll do my best to answer it by typing instead of speaking. So last night, as it is every 4 weeks, on a Wednesday night, Thursday morning, depending on where you are in the world, it was the Rocket Pool's rewards night. And this time, 24 hours before that now, since the Atlas upgrade, we see that the rewards got locked in, and the reward rate locked in was 0.00498 RPL per ETH. And that just, ETH RPL, that's RPL ratio, is 0.00498. So RPL actually, for a couple of days, where the price went up a little bit, I guess leading up to the rewards day, where it had fallen from the highs that it had because of the pump last week. So then about 24 hours later, we had the reward. So the inflation occurred here at around 2 a.m. Eastern time and around 8 a.m. Central European time, and we see that there was 77,242.9 RPL that was minted. The total supply is now 20,676,000, and this was done. And you can see here that Marco Barco started claiming right away, and he was getting around 5,000, 10,000, nearly 10,000, 8,900, 8,500, RPL that was claimed, and then a whole lot of it staked as well. So there was a whole lot going on. The claiming rewards. Marco Barco was doing claiming a bunch of rewards. So that's pretty cool to see. Well, unless it gets sold, that is, of course. But yeah, the rewards that happened, and it all went quite smoothly in the end. So that was good to see. In other Rocket Pool news, something that's not so good to see is yesterday in trading there was a discussion about what 1KX are doing with the RPL that they withdrew from their node that they shut down, and so far they have withdrawn around 110,000 RPL, and that has been sent to Binance. As you can see in this screenshot from Etherscan, there was the transaction coming in from their validator, from their node, and then that was sent to Binance. So it's almost definitely the case that that will be sold. There's a small chance that they're using Binance to kind of hide where it goes after it, kind of like obfuscating the trail. They might be sent to other wallets. Although that's probably not the case. What would most likely happen is that they're doing some kind of time-weighted average sale, a TWAP, and that might be that they're selling, every hour, every 10 minutes, every whatever, for a certain amount of RPL, and then it might also be that they've set limit sells. So as the price goes up, they will be selling into that at certain prices. So maybe every 10 cents they're selling 1,000 RPL. So I don't know exactly, but the fact is that this has now gone on to the market, and it looks like it's going to be sold. So there was a lot of people kind of talking about what's going to happen and how this is FUD, and how it might impact the selling, basically. So there is that issue right now, but the fact is that if they sold all of that on CowSwap in one go, it would lead to a 20% price impact of 110,000 RPL. Here non-fungible liquid says they've got another 200,000 RPL on that node that they'll be able to withdraw in about 4 to 5 days. So I said a 500,000 RPL sell on CowSwap would send the price down to 0.00165, which is actually the Smeagol ratio of 0.0017. So it would be like the prophecy was fulfilled. Of course, that is very unlikely to happen. 1KX are not in the business of selling all their crypto like on the market for an illiquid asset. It's most likely what they'll do is either do a time-based sell or some kind of limit sells where they act as a walls on the way up. So yeah, I thought I would cover that with you all. Next, we have some news from the forum, and this is from Waka, who of course is the pDAO treasurer. And Waka says, "You need an intro on how the pDAO works, treasury works. Check out this post. It's time to update this. I'll work on a new explainer post." Then he says, in this period, the pDAO received 6,469.07 RPL from inflation. The pDAO's balance now is 79,000 RPL, which is pretty nice. The IMC were paid 10,964 RPL. The GMC were paid 4,495 RPL. And then there's a sheet that you can check to stay on top of where the treasury money is and what's going on with that. But that 80,000 RPL, a big chunk of that will be used to pay for the team. I think about 5% of inflation will be going to the team from that amount. If everything is, if everything goes smoothly, and then that will leave us with, a few $100,000 potentially, hopefully more than that, to do some good marketing plans and systems. So if we wanted to push things, we'd be able to do that when we're getting, the Trident going, and potentially for Saturn 1 as well, we'll have a nice marketing budget potentially for that to happen. And then going back to the Discord here, we have a member who joined relatively recently, who's SSJ2, and they were getting trolled in Discord, and here in Viz and looking for owls were trying to get him to change his name. So for those of you who've been watching Rocket Fuel for a while, if you go back to the episode where Thomas, T-Pan joined, you'll remember that looking for owls got him to add support to his name and got him banned within minutes of him being on the Discord. Well, SSJ2 has been making actually pretty nice impact in the community recently. Just talking to lots of people, being kind of like a positive figure in the community, which is kind of cool. And then in Viz and Owls said, "Hey SSJ2, have you thought about putting support business development in your name? So it's clear that you're a broke director with a heart. The VD, instead of being business director, is changed it to a business development, changed it into broke director." And then looking for Owls said more like BD _ support, like the support for broke directors. And then what happened next, right here? SSJD changed their name to broke director support. Can I just change it to broke director support? So people said the reply to the Gotham emoji, knowing what was coming, and then the laughter started because SSJD got banned. So looking for Owls and Invis were quite happy with that. And he says, "Invis, look what you did." And then they had to call Kron to get him unbanned. Sorry, Lula said it really worked again. and then saying they got banned. And then Kron turned up a little while later, saying that who's got the most people banned so far, and also can you let them know that they can rejoin. And then we kind of reminisced about how LFO, looking for owls, getting Thomas banned was one of the top moments in trading history. But then eventually SSJD came back and with this crying emoji, and we just said that it's an act of love and we're just initiating you. And then I think he felt a little bit better about that. But trading's still up to its usual shenanigans, regardless of going on in the wider market. Okay, let's move on to some Ethereum news now, and there's a whole lot of stuff to cover in today's episode. So we're going to get started with the big news from yesterday, and this was that OpenSea received a well notice from the SEC, and this is from Devin, who's the CEO and co-founder of OpenSea, saying that they received a well notice threatening to sue us because they believe NFTs on our platform are securities. We're shocked that SEC would make such a sweeping move against creators and artists, but we're ready to stand up and fight. Cryptocurrencies have long been in the crosshairs of the SEC, and companies like Coinbase, Uniswap, Robinhood, Kraken, and Consensus have been fighting against the SEC's single track approach or regulation by enforcement. They said this would move into uncharted territory. By targeting NFTs, the SEC would stifle innovation on an even broader scale. Hundreds of thousands of online artists and creatives are at risk, and many do not have the resources to defend themselves. So then there's more information here, and they're going to say it would be a terrible outcome if creators stopped making digital art because of regulatory saber rattling. Take, for example, the suit filed against the SEC by the musician Jonathan Mann and conceptual artist Brian Fry, which describes their fear that the sale of their art and music could be deemed unregistered securities offerings. So a whole lot of people got behind supporting these guys. Here, Soneium says this is exactly why we're fighting the SEC. I covered that on a couple of weeks ago about how that's happening. I have a lot of love for Jonathan Mann, so that's cool that he's fighting them. A whole lot of people then came out and kind of talked about what they thought of this. Jonathan Mann, of course, being one of the people they mentioned. So they said this is why we're suing them. A beautiful memory of meeting Devin in Prague in DEF CON in 2018. There were so few of us that cared about NFTs back then, even at a huge Ethereum event. It was just after I got off stage, they told me about OpenSea, the platform they were building, and hoped it would be the main place people go to buy and sell NFTs and manage their collections. If you told me at that moment that 6 years later, OpenSea would be sued by the SEC and I would be suing the SEC, all because some rogue regulator with a god complex wanted to label everything that happens on the blockchain as security, I would have said, what's the security? Anyway, this is why we're fighting. So, yeah, it's really horrible. Jake Cherinsky, of course, who's a lawyer, said the SEC has fully lost the plot. The idea that a financial markets regulator established in the 1930s would have jurisdiction over digital art in the 2020s defies not only common sense but also the SEC's statutory authority. Thanks to OpenSea for fighting the good fight. So they're of course saying that fight right, and Jake is saying good job. Hayden Adams here, who's also being sued by the SEC as part of Uniswap, is saying welcome to the fight. In crypto, an SEC Wells notice means that you're a legit company building an important product in the US. SEC are clowns taking the idiotic stance that digital art magically transformed into security when it's put onto a blockchain. So yeah, that was a lot of comments of support coming out from there. And one really cool thing that OpenSea kind of finished up with was saying that, we received a Wells notice. We're shocked that SEC would do this. And then there was this point here. They said that to ensure creators continue building without fear, we're pledging $5 million to cover legal fees for NFT artists and developers that receive a Wells notice. Read more on our blog post here. So it's really cool that they are putting some money to fight this. What's really interesting is that OpenSea, a whole lot of people in 2021 said, hey, you guys need a token. You guys need to get a token to stay relevant. OpenSea have got big competitors up 219 since then, like Blur and Magic Eden and other places across other blockchains as well, not just on Ethereum. And what's happened is that they've lost a lot of income. Is probably down like 90 to 95% compared to the heights of 2021 when NFTs were a huge thing. However, I guess they were making a lot of money back then, so maybe they didn't need a token, but now they're going to need money, I guess, to fight against the SEC. Hopefully they've got enough money to be able to do that. It looks like the NFT market, might come back. At least some NFT projects will probably pump in the next year if there's traditional crypto 4-year cycle bull market. But in the meantime, the SEC is trying to strangle crypto where they can, and these are hitting the biggest exchanges like Coinbase and Kraken. hitting the biggest products on crypto like Uniswap, OpenSea. I wouldn't be surprised if they try to come after Aave or Maker if they can, to do whatever they can to try to like stifle these really, really big projects, the biggest, in their categories by far. And I think it's a really sad situation because the SEC have lost in court over and over again, and the courts have told them that the way that you're defining securities doesn't apply, like in the XRP case, like in the Coinbase case, to some extent. That we'll get more clarity about that. But what the real thing that's happening is that they're trying to stifle the growth of crypto. I don't know if that's because they want to put regulations in place first before crypto grows bigger, if they want to try to like block the system altogether. But this is definitely, we're in the middle of the then they fight you phase. And of course, the next phase is then you win. Now, depending on what happens in this election, that might have an impact on how crypto is treated and crypto companies are treated in the US, at least. It seems like the Democrats haven't made too much of a move on trying to reposition themselves to be pro crypto. However, the Republicans have been saying that they're going to be more pro crypto than like they're going to be the pro crypto party. So that's definitely something to pay attention to and keep an eye on. But otherwise, the SEC seems like it's a rogue regulator, and they're trying to regulate by enforcement, and of course that's the wrong way of doing it. So it's really disappointing to see this. Vitalik had some interesting ideas on what the future of airdrops might look like. So he shared this on Twitter yesterday, and of course, as people are paying a lot of attention to what Vitalik's saying right now, myself included, I seem to be covering tweets from Vitalik every day. He says airdrops are a fascinating initial use case for ZK blockchain-based identity credential attestation frameworks. The goals of an airdrop are distribute to community members and not randos who will immediately sell, reward contributions to the project, be reasonably egalitarian, but some disparity is okay, and resist extractive adversarial farming. And says these are exactly the properties that identity credential attestation frameworks see ideas in this blog post are trying to achieve. Hence, for anyone building such frameworks, it makes perfect sense to use token issuance as an initial use case to beta test and refine their work in that adversarial environment. And says one related point is that giving tokens away for free is not the only form factor that makes sense for this. You can also do discounted sales. I talk about the reasons why to do this here, and then there's a link to another blog post. And then Vitalik says, depending on the degree of membership contribution you can prove, you can buy a corresponding number of tokens at a reduced price. This helps to make the supply more distributed and rewards non-financial contributions while still ensuring buyers have skin in the game. Any technique that works for airdrops also works for discounts. A related concept in ETHGlobal is to subsidize saving rates for smaller accounts as an alternative to universal basic income. Singapore's CPF already does something similar to this. So this is actually a really interesting idea by Vitalik that I think would be amazing. So let me just give you the example that I have, okay? So I farmed ZK Sync airdrop and I got a token allocation that I was fairly happy with. I claimed the token when the price was around 25 cents or 30 cents, somewhere around that price. So that means that at that point of claiming, that was income for me. So I had to pay tax on that. I thought the price would go up, so I just sat on the token and didn't sell it. And since then, the price has gone down, and today it's like 11 cents. So the cost of me claiming that token is at one point was more than the total sale that I would have gotten from that token. So what Vitalik's suggesting here that I really like is instead of ZK Sync saying to me that, hey, you can these X tokens that we want to give you, we don't want to give them to you. You can buy them for like $100 or $500 or $1,000. And at that point, if the valuation compared to what I thought the tokens might be worth later, if that looked good to me, I would pay that, right? And then I would get those tokens. And I think that's actually a really, really interesting way of doing it, because that would be me buying the tokens. It wouldn't be me getting the tokens as income. And I think it might like make it so fewer people claim the tokens. But the reality of the situation is that it actually ends up being a lot more useful for that person, because even if they bought it and then sold it at market rate where the tokens are trading at a higher price, then it would act um, as capital gains instead of as income, and you would have that choice if you wanted to do that or not. So you claim it, you use money to buy the token, and then you sell it right away. So you'd only pay the capital gains tax on that as the price changed or went up. However, if you claimed it as for free, then you pay income on that, and then you pay capital gains on top as well. So I think it's a really great idea. I think Vitalik, of course, is full of great ideas, so that's why we share them all. But I hope that these airdrop changes kind of go somewhere. Okay, next we're going to be talking about Ethereum flows, and this has been a pretty depressing subject recently. So much so that I've not really been covering it on Rocket Fuel these last couple of weeks. That's because we had 9 negative flow days in a row, and the reason why I'm covering it today is because we finally we broke that streak and had a positive flow day. And the worst thing is that this is juxtaposed against Bitcoin having all-time high inflow days. Well, not all-time high, but like really high inflow days. And that altogether just makes a really depressive reading. So yesterday we got 5.9 million in inflows, and that means the total outflows so far from the different ETFs. And of course, this is almost all of it from Grayscale's ETH is minus $475 million worth of ETH has hit the market. That shouldn't, basically. So it's really disappointing to see that. Nate Garassi, who you might remember, was one of the analysts who was talking about how the ETF would be approved. He had Eric Balkunas on his show called ETF Prime, and this is Nate Garassi's podcast, and he pulled out a little audio clip of that where Eric Balkunas was talking about the ETH ETFs, and Eric famously, of course, called the ETH ETF small potatoes, and he said that it was as if the Support Act, Sister Hazel, was coming onto form after the Headline Act, which of course is Nirvana. And then he actually ended up saying that this is the performance of the ETH ETF so far has been even worse than he thought. He thought that overall the performance would have been positive so far, but of course it's negative by $400 million, whatever it was that I just said a few minutes ago. And Nick Grassi says that, we have to say that he's right so far with his analysis, after a month of the ETF or more now. He says it's worse than he thought. He's right, but he says, I'm still taking the other side of a bet longer term. So he thinks that, the ETF is going to eventually become positive and then start outperforming Bitcoin to the point where it becomes about, a 25 or market share kind of market cap share of weight for those ETFs between Bitcoin and ETH. Now, one of the things that Eric said in this podcast was that with the Bitcoin ETF, if you compare it to something like gold, you'll see people, first of all, that it just came first. So people were like, oh, I've already got my crypto allocation. I don't really need to diversify within crypto. Having Bitcoin is fine. So they already got the allocation and they were set with that. Another thing is that he was saying that they just go for the biggest asset in its type, and then they don't really people don't really bother with having the smaller assets in that type. And he gives the example of the gold ETF. He says the number of people who hold the gold ETF, vastly outnumber the people who hold the gold and the silver ETFs. It's just the way the markets work. People just pick the biggest product in that space and then just hold on to that one. So some of it was quite damning listening, but I'm hopeful that with the bull market, attention will come back to ETH, and once attention comes back to ETH, then hopefully we'll start seeing the ETFs outperforming the BTC as well. Jack Crow here says, ETH will come. People will realize that fundamentals are important, and the people are just saying, they've just heard of Bitcoin. Maybe they haven't heard of Ethereum. It'll take time to educate them. We haven't seen people like Larry Fink going on Squawk Box or whatever else, popular finance news shows and talking about Ethereum in the way that he was bigging up Bitcoin. These kind of things really do have an impact. And people were saying that maybe, people are just waiting for the stake ETFs. I, of course, personally think that's kind of a dumb thing for them to do for like 3% returns or whatever it is that you get from staking nowadays. The real rewards that you could get before the staking ETF comes along could be much higher than that. So that's something that's going on there as well. Okay, so we covered Sony going on to their Soneium layer 2 that's built on the OP stack, of settling to Ethereum, of course, as a layer 2, and they are now starting to hype it. So they said Soneium Minato testnet and Soneium Spark incubation details are here. So they are running a public testnet that they give information for here. It's going to be accessible to developers, all developers and creators interested in building applications. They also have some information about what their testnet will bring, how that enables the formation of the community, etc. And then they go on to talk about Soneium Spark, which is igniting tomorrow's innovators. And it seems like they're putting a whole lot of money towards this, which is actually really, really interesting. So over here, they said that they are setting aside investments up to $100,000 per team for visionary developers, creators, and projects ready to build on Soneium. Join us to bring your ideas to life. So it seems like they've got a little bit of a war chest to get apps and developers moving onto Soneium. And I think that is going to be quite successful. Like the sooner they integrate Soneium with the Sony family. So here in this screenshot, they're showing like Sony Innovation Fund, Sony Music, InZone, Sony Global Education, and Sony Pictures. The sooner they start to integrate all of these different parts of the Sony brand into Soneium, the better it is. Like you can imagine video games being on there, music being on there, movie memorabilia, NFTs, etc., all of that kind of stuff being on Soneium. I think the potential here is quite phenomenal. There's other people who are less hopeful of Sony, this being substantive. One of the reasons for that, of course, is Sony has picked the loser in some tech cases in the past with like Betamax and Blu-ray HD DVD and things like that. But hopefully this time Sony gets it right. So definitely keeping a close eye on that. Okay, Open Zeppelin here shared some big news coming out of Arbitrum. So Arbitrum, of course, are wanting to attract developers. They're seeing a whole lot of people are going to Base to do their work there. And Base is just growing so strongly. Well, Arbitrum kind of want people to be coming to Arbitrum. So they announced a subsidy fund of $2.5 million. And this is for security services in the Arbitrum ecosystem. What they're actually doing here is they are using this to pay for audits. So they're going to be providing audit money towards audits for projects that are building on Arbitrum, which I think is really cool. Like I said, with all of these projects, what you want is, with all these layer 2s, what you want is developers coming there, good apps and projects coming onto your ecosystem. And the way that you do that is by incentivizing the users, right? Like you either give them grants and funds, or you give them money towards their audits, etc. But the more that you get, the bigger moat you build, and then the more market share you can get. So I think it's pretty smart. Okay, here we had a post from Kiwi News saying that they have a chance to win $1,200 by writing about L2s. And then they give some information here about L2s, about how Ethereum relies on L2s, and you can pick these prompts, what most people should understand about L2s. Are L2s part of Ethereum? What the biggest difference between existing L2 cultures, etc. They've got a whole bunch of questions that you could ask, or come up with your own question, your own thing altogether. The reason why I'm mentioning this is because Vitalik here actually has a suggestion. He says, I'll propose a specific question. What are specific things that L2s can do to make their relationship between each other and L1s more collaborative and maximize positive sum games? So I think this is really interesting because it kind of shows you where Vitalik's thinking is about the L2 space and what kind of questions he wants answered about what people are thinking about the relationship between the L1 and the L2. I think that's very telling about how he wants there to be more collaborative and how he wants there to be a positive sum games. Ryan Beckerman's here as well, says, what are the specific things that L1 community and or EF2 can do to maximize cooperation between L2s? Where he says, start asking questions, more faster cross L2 ERC standards, Ethereum-wide marketing, BD vehicles with L2s as members with skin in the game. So if you're interested in answering this question, or if you thought about this question a lot, you could get $1,200 and definitely see if you can answer Vitalik's question, because I'm sure he'd appreciate it and would actually read it. Okay, next we're going to be talking about ETHGlobal. So ETHGlobal is, a set of conferences, hackathons, meetings that happen around the world pretty much all the time. I think there's a different one happening every month, or maybe even more frequently than that overall. And here they are saying that, where do you want ETHGlobal to go in 2025? Let us know in the form below. So there's a form here, and it has information about where it should go. But people started answering things like Median and Latin America, Dansk, and somewhere warm in winter. So people want to go to Puerto Rico, Texas, Bali, all these different places. If you're interested in attending ETHGlobal, or if you want ETHGlobal to come to where you are, then definitely complete the form and make your case for that place. Liam here shared locations of where previous ETHGlobals have happened. Liam, of course, is the co-founder of ETHGlobal, and there's been at San Francisco 3 times, Bangkok, Singapore twice, Brussels, Sydney, London twice, Istanbul, New York, Paris, Waterloo, Lisbon, Tokyo, Amsterdam, Bogota, Mexico, Cape Town, Boston, Denver, and Buenos Aires. So these are all the different places that ETHGlobal has visited. So maybe you might want to go back to one of those places. Maybe you want them to go to somewhere new. I definitely put down Chicago on that list, because then I would go to ETHGlobal. But it seems like all of them have been held outside the US, which kind of makes sense, I guess. But maybe Waterloo or Toronto, I guess, would be closest to where I am. So maybe those would be good places to go. But if you are interested in ETHGlobal coming to where you are, then fill out the form that I mentioned just now, and you can make the case for that. Okay, we've got some interesting ideas about branding here, and Samantha Marin shares some ideas about this. She said, everyone's talking about rebrands, and I'm noticing a larger one around the whole space. So she thinks that the idea of Web3 has become the new internet. So she gets an example from ENS Domains. So if you go to their Twitter page, you'll see at their banner now says, welcome to the new internet. So there's no mention of crypto, there's no mention of Web3. This is now the new internet. And she says, popping up in a lot of different places, the new internet is the new way to skirt around the baggage that crypto and Web3 have been carrying for years now. It's a nice blank slate. FTX didn't collapse on the new internet. Terra didn't depeg on the new internet. It's more forward-looking, more all-encompassing. The new internet can be broader than just crypto too. It can mean AI, it can mean whatever comes after it. It's a more inclusive and tech-agnostic way to position your brand, and may even feel safer amidst the drama of crypto in the political sphere. And then using the ENS header as an example. Other people then here said that they've been using it as well. They've been calling it the new internet in the way that they're presenting information. CoinFund apparently used it, and others are using this new term as well. So it might be that we start seeing the new internet being the word of the day, basically, for this next few months, and heading into this next cycle, potentially as a way of distancing, the baggage that comes with crypto and Web3. But that's something to keep an eye on. Okay, so in other news now, we've got news of Ton blockchain. So for those of you who don't know, Ton blockchain is built out of the Telegram ecosystem, the Telegram Messenger app, and Pavel Durov, the founder of that, has been arrested in Paris. His bail was set as $5 million. However, while he was being held, awaiting his charging hearing, he's been charged, sorry. The Ton blockchain during that time was suffering huge outages. The first one, it went down for 8 hours here. It was down for a long time. And then this is from Ton Scans Blocks. Mer, who's in the Solana ecosystem, couldn't help but comment on this. So he said that Ton blockchain has been down for a while now. Downtime happens well, of course, he's going to say that because he's on the Solana ecosystem, but downtime shouldn't happen, but they should definitely not happen. But he says, but what's unacceptable is that there's no official comms. There are many people who literally can't access their funds and they have no information. And then the meme here says, instead of having your own blockchain, this is why you have built on Ethereum. Tons should have opted to be an on-chain rollup where users could permissionally exit to plain Ethereum accounts in the event of a technical problem. So of course, the Ethereum L2s will be coming with escape hatches that you can use to get off L2 and back onto L1 if you have any issues with the L2. And then Bankless here shared the information that the Ton blockchain was down a second time in 24 hours. People started teasing them saying it's bad when Solana beats your uptime. Mantis Network here had a tweet saying down, down, down. And a whole lot of other people said things like, I like blockchains with uptime. So this was bad luck, but the founder being in jail, I think definitely doesn't help with that. However, seriously speaking, if you it shouldn't matter, right? If your founder does end up in jail or not, the blockchain should keep going, and no one person or no one entity should be able to bring it down. So it's really, I think, worth paying attention to what's going on over there and how it's being validated. Okay, then we've got some political-ish news at the end of this episode to wrap it out. But this is news about Binance, and this breaking news that from a couple of days ago, that Binance has seized all crypto assets that were on their exchange of Palestinian people at the request of Israel. Now, of course, it doesn't need to be said that there's a war going on in that part of the world. I don't want to get too much into that part of it, but relating this to crypto, of course, crypto being seized on the exchange is really not good. Simon Dixon, he has some information about it, saying that Binance now functions like a bank. Of course, as part of its settlement with the US, with the Department of Justice, they set a US team to oversee Binance's operations. So those compliance teams are very much in line with the US. There's some more talk here as well about it's not that all accounts have been frozen, but only that some accounts have been frozen, or that's what it looks like. And then the thing that I want to highlight for you all was that Simon Dixon here says the first rule of Bitcoin is to learn, not your keys, not your coins. Sanctions are financial weapons of mass destruction inflicted on innocent civilians as a collective punishment and are enforced upon centralized financial institutions only. You should store your Bitcoin in self-custody. So I'm not going to read the whole post because you guys can do that yourselves. There's other things in there that I don't really outside the scope of this video. But the main thing is, if you have crypto, do not have it on any centralized exchange. Have it on your own wallets. Have it on your own, hardware wallet, ideally, or even more than that. If you can, have it on some kind of multi-sig where you control, the keys, either all of them or some of them, with very trusted people potentially controlling some of the keys as well. But this is just one of those situations where the values of crypto, you understand that these centralized companies don't share the values of crypto the way that we as users want. They, also have other people that they have to answer to, and sometimes that if you trust the centralized services, you can get very badly, like these people are being now. And if you are still on the centralized exchange, please get off the centralized exchange. Take control of your crypto yourself. Here, Lola says that this is actually an action that's been happening for a while, since October 2023, and people in Gaza have had their accounts frozen. People who were Turkish and Saudi Arabian also had some of their accounts frozen, and they were told by Binance to contact the Israeli police. So it's not that Binance is freezing all Palestinian accounts, but that's what the word went out, but that was probably wrong. And there's potentially a story here that might be worth following to see how this is happening and why this is happening. And then finally, I'll cover this part here. Suleiman shares this news that 44,808 Bitcoin worth over $2.6 billion was withdrawn from Binance in the past 24 hours. So you see, exchange wallets and their crypto holdings, you can see that a whole lot of Bitcoin was removed from Binance. I'm sure other cryptos as well. Now, that is not to say that this was in response to Binance doing this action. It might just be, a correlation, not necessarily causation. But the fact remains that if you have crypto on the exchange, don't do that anymore. You want to keep your crypto in your own control and control your assets, because that's kind of the whole point of crypto, and that's the only way you get that guarantee that your assets can be seized. You hold on to those. So on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely day ahead, and I'll see you all tomorrow. Bye.